Good morning, traders. Here's your pre-market report for February 28, 2025. We begin with the Reserve Bank of India's decision to relax lending rules. The RBI has eased capital reserve requirements for microcredit loans, reducing them from 125% to 100%. This move is anticipated to inject approximately 1 lakh crore rupees into the lending market, boosting liquidity and potentially improving net interest margins. The market is now keenly watching for further relaxations on personal and credit card loans, which could trigger a significant upswing in the financial sector. Overseas, former President Trump's tariff threats are casting a shadow over global markets. He's considering a 25% tariff on goods from Canada and Mexico, citing concerns over drug trafficking. Additionally, a 10% tariff hike on Chinese goods is being discussed. These potential trade barriers have already contributed to a notable downturn in US markets. Speaking of the US market performance, we saw significant declines overnight. The Dow Jones Industrial Average fell by 0.44%, the S&P 100 dropped by 1.58%, and the Nasdaq experienced a sharp decline of 2.78%. The VIX, or Volatility Index, surged by 10%, crossing the 21 mark, indicating heightened market uncertainty. Oil prices are on the rise, increasing by 2% following the cancellation of Venezuela's oil licensing agreement by the US. Double crude is now trading around $70 per barrel, while Brent crude is at $73.5 per barrel. Today marks the effective date for the MSCI rebalancing, which is expected to trigger significant trading activity in the Indian market. Some stocks will see their weightage increased, while others will experience a reduction. Consequently, foreign institutional investors, FIIs, are expected to be net buyers, with an anticipated inflow of over $1 billion US dollars. Looking at stock open interest, we see a short buildup in stocks like Polycab, Ultratech Cement, Have India, IEX, and National Aluminium, indicating potential downward pressure. Coal India is the only stock showing a long buildup. In terms of macroeconomic data, Japan released figures showing positive retail sales and consumer inflation, but industrial production contracted more than expected. In Europe, traders are awaiting inflation, GDP, retail sales, and unemployment data from France and Germany. For India, today's key data releases include the Q3 GDP figures at 5:30 p.m. and the USPC inflation data at 7 p.m. Turning to technical analysis, the Nifty opened with a gap up but remained range-bound, forming a bearish candle pattern on the daily chart. Key support is at 22,500, with a potential decline to 22,200 if this level is breached. Immediate resistance is at 22,650. The Bank Nifty outperformed the Nifty, forming a doji candle pattern. Resistance is at 48,970, and a break below 47,625 could trigger further downside. Finally, Nifty options data suggests a short-term trading range of 22,500 to 23,000. Traders, stay vigilant and trade cautiously, keeping these factors in mind.